Hi, Mike here. It's good to talk with you. I'm in Eleuthera, Bahamas, and I'm visiting Dave Skarica. You know Dave because I interview him quite often, a couple times a month, and with what's going on in gold, I've been interviewing him even more often, and I'm here with him on the island that he lives on, and just hanging out because of what's happening. This is the optimal time for us to get together and talk about different investments and gold stocks and plan ahead for the rest of the year. So Dave, you're from Toronto, or the Toronto area, and you moved down here. So why do you think living here makes it easier for you to invest in the financial markets and do well?
Well, first of all, part of the reason you move here is obviously a lifestyle choice. We're actually at a nice restaurant called the Beach House right now, and you can see like how nice it is here. And Eleuthera is kind of famous for these long, winding beaches and that sort of thing. So obviously part of it is lifestyle and the weather. And they had a brutal weather up there in Canada in the Northeast. But in terms of investment philosophy, if you read, like John Templeton moved to the Bahamas in Lyford Key, which is a high-end gated community, but probably when it was more like an island like this back in the mid to late 60s. And what Templeton said that is actually his investment rates of return went up afterwards, and part of the reason was he was away from Wall Street, he was away from all, the pitches you get and all this. Everyone goes to the same seminars, everyone goes to the same meetings, everyone gets the same, like I said, pitches from companies and all this sort of thing. So when you're down here, you're really away from the crowd, and you can kind of develop a really, I think, independent train of thought. With like me, I do a lot in the mining industry, but the problem is if you lived in Toronto or Vancouver, you'd be going to these meetings, and the problem with that mining industry is that everyone's always positive. And obviously there's a time to buy and a time to sell those stocks like any other sector. So instead of being in Toronto and being in a bunch of meetings and getting pitched on everything's great and being influenced by those things, you're kind of down here. And I think you can become much more independent in your thoughts. And then, in terms of the way you can do work, especially in Eleuthera, because Nassau somewhat has become like a city. It's very laid back here. It's very slow pace. The whole island only has about 10,000 people, and you can go to the beach, take a walk on the beach, and sometimes that's where I come up with my ideas, or where I want to invest, or things of this nature. So I think being kind of independent and alone and away from the crowd, it makes you more able to be like a contrarian.
Yeah, that's the thing about John Templeton's story. When I started out investing, I read the biographies of a half a dozen really successful investors or traders, people like Jesse Livermore and Warren Buffett, and the John Templeton story. And now that I've been investing for a very long time, it's actually probably John Templeton's principles that have more of an impact and influence on what I'm doing nowadays, because he sought out markets that were extremely cheap. He used the PEG ratio to invest in countries, and then he would look for the cheapest stocks inside those countries. And that's essentially what we did in Europe and overseas. But now it appears definitely that it is the mining sector and commodities that are very undervalued and turning up and ready to go a lot higher. But you know a lot more than I do about the Templeton story. I know you went to his funeral, actually, know people who knew him personally. So what was it about him being in the Bahamas that you think really makes his story unique from the others?
The first, I was actually at his memorial service, just to make it accurate. But the first thing I think that makes it unique is that in the mid-60s, there would have been no mass communication. Like a lot of the information that he would have got down in the Bahamas would have been days or even weeks old, right? And obviously there wasn't as much competition in the investment arena as there is now. So that was actually would have made it really, really kind of unique, that he wasn't probably trading on what we would call up-to-date information, number one, okay? And number two, he really would have been away from everything at that time. Now, a lot of these Caribbean islands, like the Caymans, like the Bahamas, like Bermuda, like the BVI, have become places where hedge funds are operated from, and they become offshore financial centers. And you probably would have been before that time back then. So he really would have been away from everything. And the interesting point about him was he actually had two businesses, right? He had an investment like advisory firm, like a management firm, and he had this fund, the Templeton fund that he managed. And basically he came down here to retire and do kind of charity work, and he wrote a lot about spirituality and the connection between science and religions. Anyhow, he wanted to really start that work, but he couldn't sell the fund. So he kept managing the fund, and the fund actually in its first 10 to 12 years, its inception from about the late 50s to the late 60s, performed at the market, even slightly under the market. And then right when he moved down here is when the fund really began to outperform the market. Partly his major trade of the 70s was he was long Japanese equities. When Japan was starting a big secular bull move in the 70s and 80s, and the United States was starting a big secular bear move in the 70s. So he was long a market that was about to really outperform the US market. So that would have made it like really, him coming down here would have made it really unique. He picked the right market at the right time. And then he met a guy named John Galbraith, who was his marketing guy. And what they did is, on a handshake agreement, one thing that Templeton had never been really good at is marketing. So Galbraith began to market in these funds all over the world. And of course, when you market funds, you get more inflows, you get more assets, and then the performance kind of backed up those inflows. And he did really well. And what's interesting, this is the last thing, and you have a picture of it, that if you look where he first started, now when you go to Nassau, there's Templeton Global Advisors, which is kind of like a management firm, which has this huge, beautiful building in Lightford Key near where Templeton lived. And Mark Holowesko, who took over for Templeton, managing a couple of his funds, very smart, a Bahamian investor, he has a beautiful office just outside of Lightford as well. But Templeton's office was, and it's still there to this day, was a little building that was a police station on one side and a liquor store on the other side, and he was like in the second floor of this little building. And I heard actually the office was a little bit run down. I obviously never was in it because that was years and years ago. But that is where he ran basically this thing that turned into this global financial empire from. So it's just kind of interesting, because one thing I've always believed is that when you go to New York City or you go to Hong Kong or you go to these financial centers and you see these huge 100-story or 50-story skyscrapers and HSBC or Citigroup and all these banks are located there, I don't know, it looks impressive, but that's not really how you make money in the markets. And I don't think much has changed. I think people can talk about computerized trading or markets moving more quickly or whatever right now, but I really think that it's exactly the same in terms of being a contrarian, finding value sectors that are underperforming, etc., like Templeton did. And you can do it from a place like this. Obviously you need something like an internet connection, but really you can still do it being isolated. And just because people act like computerized trading has changed everything, it really hasn't. So that's what he taught me, is that being in an isolated place and away from the crowd is not necessarily a bad thing. And like I said, you just look at the first building that he was operating of, and he became basically, with Warren Buffett, Soros, a couple other guys, one of the greatest investors in the history of mankind. You can kind of see that a lot of what goes on in the investment world is bogus.
The thing is about his story is, if you take Templeton, he started out and got really big. We started in the 50s, got really big in the 70s, and Soros did commodity trading. The thing is, all these guys caught a trend at the right time and knew what to do and implement it. It seems to me right now, it's commodities that enables us to do that. Everyone listening to this video.
Yeah, and what we'll do in our next couple videos, like this, we're showing you why I live down here and I come up with ideas. We're going to show you why we think, I think the stock market is again topping in some sectors is a bubble, and we'll also show you why commodities and gold and some other sectors we believe are cheap and about to move higher. And even though Templeton himself was never really a gold fan, we're going to show you why, using some of these principles, we believe the sectors are undervalued.